Hello, Congressman Hasagawa and Senator Prentice. My name is Samuel Giles, and I'm a registered patent agent practicing patent law in the Denver metro area. In addition to my patent law practice, my firm provides central bank consulting services to institutions of higher education. Just a note of housekeeping that the light bulbs located on the side of the screen are links to supplemental presentations that dive into further detail about the subject matter in this presentation. I've been following the national state banking movement and have witnessed various impediments states have encountered in their respective legislatures. Specifically, opposition to the State of Washington Bill 5238 mentioned the following reasons why a state bank would not be a plausible public investment. In my opinion, the most damaging arguments seem to be centered around the constitutionality of a state Washington trust and the placement of those public funds at risk. Furthermore, you may be aware the California legislature had approved a bill to create a blue ribbon task force to investigate the feasibility of a state California bank. However, Governor Brown vetoed the bill, and in his veto statement, he mentioned, rather than creating a new entity, let's use the resources we have. In the following presentation, I will demonstrate how these risk factors can be dramatically reduced or eliminated by insisting that the University of Washington file for a state banking charter. In addition, your leadership can empower the state's flagship research institution while simultaneously capturing many of the goals set out in the state banking facility. This is University Central Banking, Evolution or Revolution? As you are aware, the economic crisis of 2008-2009 has impacted higher education in various ways, including endowment return declines, creating a volatile market with unfriendly bank providers, and reducing the ability to pay from students and families. The financial demands on universities will remain elevated in the near future. In addition, the public debate about the costs and benefits of higher education has recently intensified. Given the current state budget issues, the University of Washington, like many other universities across the country, is facing reduced funding and will need to develop new financing mechanisms. By filing a state banking charter, the University of Washington will be able to adapt initiatives to drive down expenditures and spark additional revenue streams. Before delving into the mechanics, key principles, and underlying philosophies of a university central bank, it is important to understand the magnitude and sophistication of the resources you already have at your disposal to realize a state banking initiative. Let's look a little further into the vastness of the University of Washington's infrastructure. It has well over 47,000 students. It is the top public university in terms of federally funded research dollars, $1.8 billion in its endowment fund, and is rated AAA by Moody's. And with approximately 25,000 employees, the University of Washington is the third largest employer in the state. Here's a look at the University of Washington across the Seattle metro area. Their facilities across the Pacific Northwest, across our nation, and even across the globe. Arguably, the most innovative method to achieve institutional goals under the previously mentioned economic conditions is to deploy a university central bank. In its most basic form, a university central bank may be thought of as a means by which the university administration pools its cash and structures its debt in order to maximize efficiency, investment returns, liquidity management, and net assets. University of Washington is just one of many prominent universities across the country, namely Harvard, Emory, The Ohio State University, Columbia, just to name a few, that are deploying this holistic financial management program. In the case of the University of Washington, the forward-thinking leadership deployed its central bank and titled it Internal Lending Program. The UW Internal Lending Program was adopted in mid-2008 after receiving new legislative authority to issue local debt for any university purpose. The ILP makes internal loans to campus borrowers and manages repayment in accordance with financial agreements between the campus borrower and the institution. The university then bundles those internal loans and borrows externally to secure the funds for those loans. With an internal bank structure, the treasury operation functions as a commercial bank does, managing a deposit base, investing significant liquid assets, utilizing sophisticated liability management tools, and serving as an efficient transaction processor, all with the goal of creating a surplus of additional unrestricted financial resources for the institution's use. Let's zoom into the structure of the University of Washington Central Bank and see precisely how filing a state banking charter would empower the university's central bank. The rate stabilization account would be akin to the commercial bank's Tier 1 reserve. By filing a state banking charter, the RSA can be leveraged up to tenfold. Whether profits from internal lending or leveraging its reserve capital, the university's central bank ensures that the financial resources of the university are efficiently managed for the long-term benefit of the institution and its constituents. Furthermore, it maximizes net operating income, decreases financial debt expenditures, provides a platform for revenue increasing initiatives, and profits from the RSA are plowed back into the university for mission-directed initiatives. And most importantly, by filing a state banking charter, this can be the critical step in the evolution toward a quasi-state bank infrastructure. Examining the following timeline highlights how the University of Washington Central Bank evolved. Essentially, the continuing declining support prompted UW to pursue broad statutory borrowing authority, starting in pre-2003, where business units issued individual revenue bonds, all the way up to 2008, where the Board of Regents approved new debt policies authorizing the ILP effective July 1st, 2008. Therefore, filing a state banking charter will not be a revolutionary act, rather, the next logical evolutionary step. In addition, once the bank charter is in place, it will foster transparency amongst the divisions within the university, senior administration, and the legislative stakeholders. From this milestone on, the state legislature can properly monitor the progress of the banking operation and forecast the precise time when it will be the most appropriate to deploy a quasi-state banking initiative. Building a state banking facility from the ground up would be a very expensive venture. Some opponents of this concept report that $50 to $75 million would be needed to get the bank off the ground. Well, the University of Washington developed its central bank for a fraction of that cost, just $1.6 million, and now it is currently operating at about $350,000 per year. Change in market dynamics have reduced access to credit. Universities must employ multiple strategies and develop several banking relationships in order to successfully ensure access to liquidity. By filing a state banking charter, the university will be adequately prepared for fluctuations in interest rates and credit ratings with their third-party liquidity facilities. Once the bank charter is employed, the university can realize additional savings on its cost of debt servicing on any variable rate bond issuance by financing its own letter of credit or using the bank charter to leverage the unrestricted reserve capital as a self-liquidity mechanism. Universities using variable rate debt backed by self-liquidity is not a novel procedure. An increasing number of institutions are realizing this method to reduce costs of debt issuance. For example, the University of Puget Sound in Tacoma, Washington have used self-liquidity to realize an annual savings of 20 basis points. Let's take a look at the latest bond issuance from the University of Washington. Moody's reports that the University of Washington is aggressively seeking to issue a maximum of $290 million for the fiscal year of 2012. A public research institution like the University of Washington typically incurs anywhere from $300,000 to $400,000 in fees associated with their deposit, payroll, and disbursement accounts. Once the banking charter is in place, the university will realize significant savings in these areas because the institution will be able to take these services on and perform them in-house. In addition to the possible 20 basis point savings associated with variable rate bond issuance, the university could realize an annual savings of over $900,000. Encouraging the University of Washington to file a state banking charter would accomplish the goal of using the resources you already have. In addition, the state of Washington would be in position to realize a quasi-state banking facility. Most importantly, this banking facility would not put any taxpayer funds at risk, it would not compete with any local banks, nor would it require a constitutional amendment. Just as a reminder, if you would like additional information on how the University of Washington Bank Charter will impact regional job creation and reduce student loan debt burdens, feel free to click on the light bulbs on the side of the screen. Once again, Intellectual Capital Consulting can assist in the preparation of the University Bank Charter and has developed proprietary technology specifically for the unique atmosphere of a university central bank. I hope you found this presentation informative, and I look forward to gauging your opinion on this opportunity. Thank you for watching.
1, 2, 3, 4.